Welcome to Stocks to Watch for 2023, episode 1 on Learn, Grow, Invest. What we do in this video is we go through, I'm usually joined by a friend or two from the space, whether it be, analysts, persons who contribute to the space, etc. And we meet as a group and just talk about the companies that we are adding to our watch list. So we do this for the Jamaica stock market. Let us know if you'd be interested in hearing about it for other markets. But it's supposed to be just, a very fun discussion, interesting discussion about the market, opportunities that we see and companies that we think may have an interesting year. So we're going to do one per quarter. So this is episode 1. You can expect 3 more throughout the year. It's done the start of each quarter. So, welcome. Hopefully you enjoy the discussion and, let us know in the comments below your thoughts.
Learning is the key to successful investing. And who doesn't want to invest in some way?
Here at L.E.A.R.N. Grow Invest, we focus on financial education, all with the aim of sharing our knowledge on personal finance, investing, and building wealth. We do this on the foundation of our faith in God.
If a more holistic approach is what you need, check out our Grow Faith-based financial coaching program.
Find out more about us at learngrowinvestclub.com
and follow us on all social media platforms at Learn, Grow, Invest.
All right, welcome back. Let us pray. Thank you, Lord, for this awesome day. Thank you for the ability to produce wealth. We pray, Lord, that this will be a meaningful session, one that adds value to everybody who participates. We thank you, Lord, for this community in Jesus' name. Amen. All right, everyone. So thank you for being here. Our first Stocks to Watch for 2023. So I'm going to be joined by a few persons that you already know. So let me welcome Andre Thompson. Andre is the only one with us right now. So David and Chike will be joining us shortly. So it'll be just Andre and I to start off. But Andre, how are you doing?
Hey, Jermaine, I'm good. Happy New Year to you and to the Learn, Grow.
Same to you. Yes. So we've, you've been here before we do this. The routine that we typically go with is, each person kind of shares their investment perspective, their approach, etc. I'm going to switch that up a little bit because in light of recent events, what we'll do instead is just focus on what we think investor sentiment might be for this year, because we're talking about the year, right? So I anticipate that we may see just a few changes, at least, psychologically, which may result in maybe differences in how people buy, sell, and ultimately invest. So I don't know your thoughts about that. Without being too specific about anything.
So, last year was, times were changing. Inflation was, rising rapidly, and central banks were adjusting accordingly, tightening monetary policy in order to kind of curb that kind of persistent inflation. So it was a year when I believe there was a lot of portfolio reallocation. So, yes. I believe, the institutional investors and the high net worth investors, were rebalancing their portfolio, moving into less riskier assets like your money market instruments, your repurchase agreements, your fixed deposits, your corporate bonds, your sovereign bonds that were giving higher yields, as well as these are less risky assets when compared to stock. Those markets, especially on the global bond markets, those markets weren't spared the bloodbath because that market was performed negatively, as well as the stock market. But I believe for 2023, I'd want to believe that we've seen inflation plateau, and I want to believe that the pace at which interest rates were being hiked will slow down. There's talks of slow growth in the global economy, in the US market, which is one of our source markets with respect to tourism and all the works. So it's the anticipation that the Fed and so forth will at some point in the near future want to kind of probably pause the rate hikes or maybe even revert to cutting rates in order to stimulate growth in the economy.
Yeah.
So I think this on the local space, I believe that the slowed rate hikes will bode a little bit better for stocks, but there's still a lot of uncertainty. So we'll watch and see.
Yeah, and I mean, everything that you just said, except the fact that now we have this new variable, as I said, because I mean, that's created a lot of noise that I believe will impact how people invest, maybe in a way that we don't necessarily expect or can predict yet. But what I am anticipating, so everything that you just mentioned would have been some of the things we spoke about last year. What I'm so I would have kind of figured that it was, well, at least from my perspective, the activity last year wasn't what it would have been in previous years, right? And we saw persons who would have been, satisfied taking maybe smaller profits as opposed to necessarily waiting for, like, we're seeing maybe larger volumes taking profits at smaller percentages. If I can, for saying it, for not saying it a different way, right? And so what I anticipate, at least, is that I think those who are already investing will continue to invest, but what we may find is, of course, apprehension for new investors. Because I mean, that's what we're about here at L.E.A.R.N. We're investing. We want new investors to come in, and of course, as new investors come in, the space gets more knowledgeable. We can, expand the scope in which we invest, etc. We've spoken about things on the local market, like shorting, things like that, introducing digital currencies. We haven't seen those things yet, but the thought process by some has always been that maybe the market is not ready, or it's not as sophisticated for some of those things. So us not being able to adopt or engage new investors in the same way because of maybe a loss of trust, I think may impact maybe that growth that we would have been seeing in terms of new investors coming in. And maybe what we may see is maybe unwillingness to maybe wait as long a term for profits. I don't know if you guys agree. That's just kind of my assessment based on what I've heard so far. So I'm just curious to see, especially, we have a company that's going to be listed this week. I'm curious to see how that company will trade. And of course, other factors impact that company, like the price at which it's listing, etc. But it's just it's a lot of assessment that I think is needed right now to see where we may be for this year.
Yeah, I mean, I definitely agree. In a lot of instances, you would have seen where, persons are taking profits much sooner. The whole long-term horizon seems to have somewhat diminished, and persons probably opting to hold cash, because in the most recent climate, cash would have been deemed king. So where possible, they can take a gain and hold cash and seize on a safer opportunities. They would have opted to explore that route. But you always hear that it's times like these, when the market's down, that's when you have some good assets that are very attractively priced and are properly positioned to give some excellent returns in the long run.
Yeah.
Because as I would have mentioned before, we have companies that are listed that have withstood the treacherous waters that would have seen recently. So despite all the economic uncertainties and so forth, they're still able to grow their profits. They still have a strong balance sheet. They have some would have good liquidity. Some have been able to service the debt despite higher interest rates and so forth. So I believe that once conditions improve, these companies that have withstood the test of the current times will be able to excel at that point in time.
Okay. So in light of meaning, like, overall sentiment, all of that stuff, you think, maybe that will pass or maybe not have a prolonged impact?
I mean, the sentiment has somewhat diminished, as I said, evidenced by the movement in the indexes, worldwide. I believe it's going to take some time, but as conditions improve, then I believe they'll steadily come back to the market because our market or our exchange is still a growing one. Compared to companies listed on the US market and other more developed markets, we just have a fraction of companies listed. So what we want to see is our economy to boom, successful companies generating profits and ultimately listing as a source of raising capital through equity to grow their operations and then investors benefit. So we still have a ways to go. So I believe that will continue to positively impact our market, and this will be fueled or partly influenced by the IPOs because the retail investors,
Yeah.
they love the IPOs that has a higher likelihood of
Do,
getting.
do they still really though? Because we've seen. I mean,
I mean,
we talk about that one another time. I don't want to go into that yet. I want us to get to at least our first pick quickly. That Mr. Burway, any thoughts on outlook on the market right now?
Can you hear me? Just checking.
Yeah, man. Hearing.
I mean, I echo Andrew's sentiments, the same way, but not looking at it from the financial space that Andrew is looking at it, and this is now where you make your my personal opinion and opinions of long-term investors. Your profit is made now. Everybody can make money in a bull market. Now is where you're going to be tested. Now is where we're gonna find out if you have skill or not. Because right now, there are a whole heap of companies, especially on the main market. As Andrew just spoke to it in terms of liquidity, yeah, they're actually there. In terms of balance sheet strength, yeah, they're actually there as well too. In terms of having weathered the storm and basically still making net profit and still making gross margins and still making all of the niceties that you see inside of each one of those reports that are put out by the different investment houses, yeah, they're actually there now. Why are they there now? Because the market is depressed and the main market is scheduled to basically go through further depression. And main market companies are the companies that are normally supposed to be, and I put that in quotes, not as a disrespect or anything, but it's stated supposed to be mature companies. And they are certain companies on the main market that if you weren't thinking about getting them because of the price points that they were at, they're certainly attractive right now. The thing is
Yeah.
though, you just said the first main part, which is this. Patience will be the name of the game. You can't look on, in my opinion, you can never look on main market. You will have liquidity for main market companies. They have more shares. But the thing about it is that their prices are normally higher. So getting rid to basically get a return off of cap gains from them, or you know from that sale of price, is going to be a bit more difficult.
Yeah.
However,
It,
most of the
it
main
just means all the dividend yields will be a lot better, right?
exactly. I mean, that's the normal thing about what main market companies are supposed to do. They're mature companies. They're supposed to actually be paying income. They're not necessarily plateaued, but they are at a point where they are mature to continue to pay us solid. Me personally, I mean, coming tonight, I really don't actually have picks per se because there's so many that came up on my when I started looking at it, and I'm personally looking at the main market. So my thing was, if I don't find anything that I'm genuinely excited about, I'm just gonna plug the ones that I was plugging before because actually their prices are down now, they're reduced. So I'm just gonna average down and keep buying. And the truth is, I know my companies that I hold on the main market, they pay either twice, four times, whatever it is. They pay every
I know
year.
who you're talking, man.
I'm
It's the same
good. Yeah,
thing.
I'm good. I'm good. So henceforth, all I need to do is if I don't find something that I genuinely want to hold for
Mm.
the next 12 months in the junior market or in the main market, and I said 12 months notice because I normally start my calculations going out from there.
Yeah.
I'll just double down on what I already hold in the main market because like a quick maths calculation, I was like, yo, if something that I hold gives me 100 grand, you know, for the year, and just that one company gives me 100 grand in return in terms of dividend income. Hey, that's good enough. That's good for me in terms of I didn't do anything. I just picked a really good company
Yeah.
and it's just paying. And I don't have to worry about, oh, will they stop paying the dividend? No, I don't have to worry about that because
So,
they're
so, so,
solid.
so you're saying that your focus right now could be based on the state of things is more income than necessarily cap gains.
So my yes, because it's not just my focus.
Mm.
The in all of the financial, in all of the if you're actually dialed into the financial news globally right about now, with respect to what is being discussed, all of a sudden, well, not all of a sudden, but as to the close of last year, basically when the S&P and so forth took a turn, a dive, everything suddenly growth went out the window and everybody was talking about value all of a sudden came back into the play, and most of the analysts on the international circuit were talking about value. The way how I look at it is it's trickle down. What you hear globally is Jamaica is not a bubble. It ain't no silo by itself. We are affected just the same way. Say value is running the cut globally or internationally, especially in the biggest mature market. At some point in time, value running the cut right here in Jamaica as well too. And when you look on it, we're not touching it as yet, so we're not bringing it up. But where have you really been making your money if you're really in it? It has been the IPOs that you can get in, get out of. As much as the thing has started to dwindle down, where you may not be getting the 100% return now, you might have to settle for the 45%, 50% because now everybody's hip to the game of trying to get that flip or get that turn.
Oh, okay.
Um,
I see what you're saying. So more persons have been. So I don't want to use the word lazy, but they would be focusing more on IPOs
it's not
as an
really
investment strategy
again.
as opposed to
Uh,
looking for other opportunities. Because I mean,
so
Phosphorus had a great year, but that wasn't an IPO.
Exactly. I'm gonna put it this way. I won't use the term lazy, not even because of just you not bringing it up, just because of with growth and how the thing is. Look, money gravitates to where there's where there's the possibility of greatest return. It's as simple as that. We're greedy. We want to find out where we can get it. If the IPO is it and it been working, everybody runs in, right? The question is about an IPO is just the, or should I say in general, Andrew knows this. If you are not doing deep dives and you don't plan to hold the company for the next 5 to 10 years, etc., and you have your goals, your objectives, and you just want it to turn around for you in the next 12 months, next 6 months, etc., then you're really just going off of the buzz. Okay, you hear the news sound like it might be good. You try to buy in on the news. You try to run the cuts, you run up, and then you play the game of musical chairs. I'm gonna say it as it is, how I look on it. You play the game of musical chairs. It's simply this. You just make sure that by the time you get out before the music stops. That's it. Right? The only time you're not getting out before the music stops is you actually genuinely have a reason to hold that company. You actually genuinely did something that is, listen, I see past just this one quarter, right? I see past the first annual financial statement that is going to be put out, or annual financial report, sorry, that is going to be put out. That's the only reason you're seeing past that, and you're not waiting for. You don't care if the music stops. You're ready to dance again, right? Kind of thing. So I mean, it's gonna test at this point in time how things run going through for the market this year for sure. Because make no mistake, you're gonna have a tough year this year. Outside of an IPO that we've spoken about, with everything that is happening currently, that is going on, that we don't need to talk about, that's not the purpose of this discussion. You're gonna have a tough year. That's my opinion. Still, if you're making like serious bank, you have basically dialed into doing the technicals. Andrea and I spoke about this, and there is money to be made in the technicals. It's actually there, right? You just have to have the conviction to know exactly when you're getting in and exactly when you are deciding to get out, right? And
Yeah.
I'm testing the waters right now with that. Spoke to Andrew about it. I've got a couple of plays. I'm not going to mention them. So if anybody's thinking I'm going to know, I'm not going to mention those. But I've got a couple of plays that I'm testing this year, right?
Yeah. Yeah.
In terms of seeing how it's gonna work out. So the thing is, at the end of the day, you're gonna have to do some work. So this year you have two options, in my opinion. You can go value, and you can basically go off of companies that are tried, tested, and proven. And I personally believe, in my opinion, for what works for me, if I have cap, I am going to, or the cap that I'm going, I am more convinced to go to the area where return is more certain, based on
Mhm.
companies with strong financial books, right? With strong balance sheets, with strong revenue, or even still, if you dial into the companies, because we're going to talk about them, the companies that are going to be favored in a higher interest rate market. Because look, the market is a cycle. If you're in equity, you're in equity. If you loved equity when it was up, you're supposed to love equity at this point in time in a higher interest rate, simply because the norm or the teaching
Yeah.
states that when you have a high interest rate market, you're supposed to leave equity. But when you leave equity in a high interest rate market is when normally equity that was favorable that you couldn't get before is now favorable that you can
Yeah,
start
but
cashing and
yeah,
stacking.
but usually the problem is when the prices are down, people don't necessarily want to buy.
Emotional it's
That,
it's
that,
an emo,
that's
it's
the
an emotion,
problem.
that's an emotional imbalance. That's the thing that as an investor you have to
Yeah,
combat and you have to overcome. You now have to look at it and go, yo, this company is actually finally in my price range. But then you can only find that out, in my opinion, if you are doing the work of going, yo, here is a company that I've been looking at for the last year, 2 years and a half,
yeah.
and I never liked, and I couldn't, but not that I never liked it, but I just wasn't willing to pay 38, 40,
Mm-hmm.
85, whatever it is. And all of a sudden, that price has
It's now
tanked
$15.
to like 15.
Stock
Nothing
split.
hasn't changed about, exactly, nothing hasn't changed about the company. The
Yeah,
company is still making good financials all around, still
yeah,
having growth. But hey, a stock split changed the thing. Yeah, you might not have been, you're not getting the same amount of units before the stock split, but still you're getting an entry price that is more favorable to you. Buy some units, no? You're
yeah.
convinced, you did your work, you loved them for the last 3 years, you now have an opportunity. Yo, step in.
I think what you're saying here, and we'll get to the picks soon. So anybody joining us for the first time, this is what we do because this part of the conversation sets the stage for what we're gonna say next, right? So what you're saying though, Chike, what that shows me, because there's this thing or this mindset that we often see where you buy a company, the price goes down. You wanted it to go up, it goes down. Instead of buying more, you wait. There are some persons who will wait for that to either break even then sell because maybe it took too long and they want to leave, or it just keeps going down. And instead of averaging down or ensuring that they either increase their knowledge, which would increase their conviction to hold or to sell or to buy more, they do nothing.
Maybe we should.
And
So
that's to me is you don't want to be an inactive investor, right? If
maybe
you're not.
I can put it this way then, just to
Mm,
sorry to cut, because I don't want to lose that point of the person doesn't buy more when it goes down. Maybe we should show them the chart of what happens of the type of return they need to be pushing when the price does go down, because
mhm.
after a certain point, 100% ain't cutting it anymore. So you lose 15% down, that's not that bad. 20% down, not that bad. But the moment you reach like 30,
It's
40,
60%.
50, 60, you need to be really convicted at that point in time that either A, you're not getting out because you've already been down in that loss, or you're going to actually be cutting your losses and you genuinely believe that whatever you're about to step into is not just going to give you, because now you have to make back for 50, you're gonna have to make back not just the 50, which will be 100 fully, but then you have to go another 100% basically to
Yeah.
really actually crack it open. So
Yeah.
I mean,
Find that chart for me if you can, because I think persons would benefit from seeing it. So
let me see.
all right, cool. So we're gonna bring on David now. David, how
Night,
you doing,
everybody.
Hey David.
Been a crazy day to say the least, but I'm here.
man? Yeah, man. Thanks for joining us. What we're doing is kind of sharing how the usual our outlook on the market, and we're about to start the picks. But I don't know if you have any thoughts on where things are now in terms of the market and your outlook for the year.
So, realistically speaking, more firms are going to have to choose the equity market just because the reality is they cannot afford to get new debt in a sense. So, for example, Cygnus Credit Investments mentioned is at their AGM that as interest rates rise and the risk also rises, banks will tend to retrench capital. So, what we're seeing right now is loan growth slowing quite considerably in the financial sector based on BOJ data. And the thing is, what that means is businesses still need to grow. So the two is they're going to try and find somebody willing the money and take on some expensive interest costs, or they're going to consider to raise equity. And the beauty about being in an environment like this is that you tend to get the best deals when it comes down to equity raises. And what do you mean by that? So let us look at it from a PE perspective, right? Meaning price to earnings multiple. So in a realistic perspective, some companies go to market at 20, 30 times PE, right? After you account for the general market, tax and everything, right? Now, in an environment like this, companies might instead choose to list at a 20 times PE, which means that if you're buying the IPO, it's in a company for cheaper at its initial public offering. And the reason for that is that, remember, equity is the riskiest asset class, right?
Yeah.
So even though debt itself is costing more, it has a particular lifetime, has particular terms, and so forth. When it comes to equity, I'm taking the most risk, and if I have better alternatives versus equity, then I need to be compensated to reflect that risk in a sense. Hence why you tend to see, companies that list in this environment tend to raise in at lower PEs. So although you're seeing that to an extent across the board, since companies are using $1 price and then our shares impacts the PE calculation, the reality is that companies are facing that reality. And although persons are seeing that, you have the Mayberry bond out there getting this amount of money and so forth, what I love to see is the data that was ever being published is the distribution of applications. So for example, when one had this IPO, we know that almost 99% of the applications were in the $500,000. So that's one thing to consider. And, we need to really look at the perspective of what's going on in the rest of the global environment. So right now, although everybody's back out in open, we're seeing where COVID cases are rising back again. And we're seeing the Ministry of Health is posting that data, they have these deaths from COVID, the number of cases. And remember, testing isn't necessarily mandatory to an extent. So COVID could be something that can impact us listed on the line when it comes on to the the equity markets. But more companies are going to likely choose the equity markets. But in light of more recent circumstances, you might see certain sized offerings be delayed for a little bit longer, considering the current environment. And I'm not talking about the interest rate environment, I'm talking about the current fear surrounding the securities market.
Yeah, I mean, the JSC has mentioned that we've seen announcements of, I guess, the amount of companies they're hoping to sign. I know they've had, in talks with like the JMEA, and we know that I heard that the projection is somewhere between, it's expected to be double-digit listings this year. I would imagine that the companies that I've been speaking to that are planning, that were talking to us in terms of doing coverage of their offers, none of them intend to change their timeline based on recent events, because I guess they thought it would have taken a certain amount of time to get ready anyway, and maybe by then we won't have the noise around the industry that we're having right now. And when I say noise, that's not meant to be disrespectful. I'm just saying there's a lot of chatter and talk around different aspects of the market. It's security, it's safety, best practices, etc. And the truth is, I think no matter when the next listing comes, it's gonna be something that we're talking about for a while anyway. So I wanted to share. Yeah, go ahead.
So the thing is that, remember, some of context, and this is for persons who aren't in the investment banking space. Remember, companies can't necessarily delay their financials either. So remember, your most recent financials can be, I think, past 90 days old or something like that, like 60 to 90 days old, that effect. So remember, anything you report as FSC, then go to quote unquote go through to that fine tooth comb, and if a particular time has passed, they're going to request that you submit new quarterly financials, or in context, audited that's the most recent period in reality, right? So some companies don't have a choice in terms of changing those timelines because of the subsequent delays that would come with, having to refresh some documentation. So, and the thing is, those companies are junior market companies, which have tended to see a heavy oversubscription, especially based on the $500 million share cap. Then what you realize is that
500 million, so 500 million is nothing to oversubscribe.
No, that's just it. But for larger offers, I'm not referring to maybe offer because this came up before. This was been going on since December. Different situation. I'm saying that that is maybe offer is safe and everything, but it came out that the new offers should have larger sizes. Those times should, in realistic perspective, take a temperature check of the room, just because while the person say, we as retail investors can do so much, and so subscribe these offers. Come to the sizes of capital, especially for certain companies to an extent, is not the same story. So while in 2017 December, I think IPL they got $18 billion in 1 week when it only was $6 billion. I think because branding its size spoke for itself, and that was a time when money was quote unquote cheap, even though the BOJ still raised to the current historic lows. But hopefully I can get some perspective to you guys and the viewers as to my perspective and everything that's going on, and some education as to the process when you're considering to go public as well.
Yeah. Okay. All right. Thank you for that, David. I mean, I think it's going to be an interesting year. So I'm looking forward to episode 2 already, because I'm sure we'll have some developments that are worth talking about. So we're 30 minutes in. I wanted to start the first round. Andre, we're going to start with you. What's the first one on your watch list?
All right, so the first one on my watch list is one that for the past couple of meetings, I probably had them on it.
Oh, I already know who this is going to be. Go ahead.
Jamaica Broilers.
There we go, man. There we go.
Yeah.
Okay. Tell us why.
I think Broilers been doing well as of late. They were adversely impacted by, the whole supply chain issues, rising commodity costs and things like that. So what we saw was the gross margin started to weaken. But if you look at the most recent data now, the data that is for the 6 months to October 2022, I think the gross margin came at around 25%, and that compares to 20% for the comparative period. So against this background, they reported a net profit of about, for October 2022, they reported net profit from continuing operations 1.9 billion approximately.
Wait, 1.9?
Yeah, that's from continuing operations.
Right so here? Yeah, man, about 1.9.
Oh, yeah. For the quarter.
Yeah, for the quarter.
For the quarter. And then when you compare that to approximately 600 million for the comparative period in 2021, I mean, it's a big increase in profit. So now we know that they exited Haiti.
Yeah.
They absorbed a one-off loss from the exit from Haiti, 1 billion. So I mean, this is not really expected to continue going forward. But then all right, let's take the 1 billion out of the 1.9. They still beat the quarter, the October 2021 quarter. So pretty much what they're benefiting from is robust growth in terms of the US operations, the best dressed line products, and even the Jamaica market, which is the more developed market for them, and where they get the bulk of their revenues from, is still experiencing some nice double-digit growth. And this would have been led by recovery of the tourism sector and all of that. I deem JBG to be a defensive stock because it's a consumer staple. We as Jamaicans, we're going to eat chicken. So chicken is inelastic in demand. Depending on no matter what happened really in the economic conditions, you're not really going to see any short any huge reduction in terms of the demand for chicken meat and so forth. So not only is that this defensive stock, not only is it a blue chip stock, but it's growing. Its net profit is growing like that of a growth stock. Only concern they're a bit indebted, large debt stock, but as I said, it's one to watch. At current prices, it has an attractive valuation. I believe the PE is in single digit territory, and I believe it was one of the better performing stocks last year out of the main market stocks. So I think it started the year at around 27, and the bid closed at 31 as at the end of the year. So I think that's a decent one.
And that would be better performing, and that's still under. That's under 20%, isn't it? That's what, 15% thereabout.
Yeah. And then I mean, it's a good stock all around. I've been watching them, so it's one that I want to continue to watch. Since recently, they only just entered into that $1 billion quarter territory.
Mm-hmm.
Normally they were in the hundreds of millions. For the last 2 quarters, they did $1 billion, probably like 1.1 thereabout. But for the last quarter, they did 1.8. It's like they're heading to the 2 billion region now. So
yeah,
it's some good growth in profitability. So
that's actually that's I never. So I mean, Jamaica Broilers, I like the company. I think as you said, staple, meaning the product is not likely to not be needed by customers. That it's not going away anytime soon. I never noticed those revenues though. I know you've been kind of watching them for a while now.
Yeah.
So yeah, I like that pick.
So that's.
I think the decision re-hated is just one of those things. At some point, you have to make a hard decision and just kind of move on. We've seen where companies may take too long to make the decision, and it has the opposite effect. So, yeah, I like the company as well.
So it was a tough decision. They made it. Haiti is basically in the rearview mirror now, unfortunately. But I think it was the right decision to do.
Yeah.
In terms of the overall.
So that's some color to that. Remember earlier a $20 million expansion in the northeastern belt. I think it's one of the Carolinas.
Mm-hmm.
$20 million expansion, and that's in the US operation, which is growing pretty fast. Yeah. And something to also mention is that, remember, we have trade tariffs, but we have certain protections in place for our local industry. So their industry isn't necessarily susceptible to what you'd call that kind of substitution effect via, imports, which is very good. And also add on to that, Jamaica Broilers, that Haiti was somewhat of a noose around their neck, because although the market is much larger, I was pretty, defined in terms of performance, the reality is that the Haiti situation was just getting worse. And I don't necessarily blame them for going into the country, because the most you can lose is what you try. But at the same time, it's sad to see, how Haiti evolved over these last 2 years in a sense, and where it's reached, because right now, Haiti, is the gangs are controlling the country. We're seeing there's other issues, our business themselves are also leaving the country. But at the same time, I respect Jamaica Broilers' decision, because one, it means that the Jamaica operations and the expanding US operations are going to become more manifested going forward in their performance.
Yeah, man.
At the same time, the company is, looking to see what they can cut down energy costs and other input costs as well. And the thing is that even KFC and Popeyes, for example, KFC, the exclusive supplier, is Jamaica Broilers, and KFC is raising the prices like every couple months, and the lines don't shrink.
Yeah.
Those lines don't shrink. And the hotels, for example, they're booked out. Like, have you tried to check on some of these hotel apps like Rio, because the Moon Palace and these other places, you're not getting rooms or even a booking until probably August.
Wow.
And that's pretty good in the sense that these people need to be fed, and Jamaica Broilers is one of the two major players from CB Foods, where you can get that kind of supply of chicken and to the quality that is required. And Jamaica Broilers has continuously touted, our chicken doesn't have any hormones, and no antibiotics either. So, they're playing significantly and strong on that point. So that's one thing to consider.
What even before we go forward though, I forgot to do our usual disclaimer. So I'll just say everything that we discuss here, so education and entertainment purposes, and should not be construed as professional financial advice. Let me actually put the disclaimer on the screen. Just let that kind of sink in for a minute there as we continue with this discussion. Extremely important. All right, so I didn't want to forget it. All right. Chike, you wanted to add something?
With respect to the hotels, honestly, I don't. I mean, what we see is what we take from the Minister of Tourism, etc. That we're having great stuff going on. But also, what I believe is also happening too is you have a lot of those companies. So the new thing, not new, it's not new, but I'm seeing it more often now, is the different persons offering travel services locally. And I believe a contribution to the availability of rooms also at at the more popular hotels also has to do with the fact that a lot of those travel services just basically have deals where they buy out the rooms. They basically get the rooms. So it could be a lot of local stuff as well too. But taking the point, since we are focused on JBG, that everything that has been said is absolutely correct. I don't see getting rid of Haiti, by the way, as unfortunate. I'm sorry. The way I look on business is, yes, it's sad that the commerce that Haiti would have been getting is lost, but that's business. You're a dead stick. You need to move. You need to go. So you literally were dragging me down. So pretty much now, with the removal of Haiti, with everything that is going on over in the United States, especially the footprint that they have put down inside there. Yeah, they stand to do some good expansion accordingly. And we also know that has anybody ever noticed what a chicken looks like in the United States? The whole movement is like literally people want, but who is not free range or non-GMO or so forth, etc. It plays right into Jamaica Broilers' hands. So, once everything starts to come up very nicely for them on that front, and Andre says the very last part, which is the most important part, you can cut down on anything else, you ain't cutting down on chicken consumption. Simple as that.
Yeah.
And to add context to that as well.
Yeah, go ahead.
We're seeing where, although Chris Berry is a known personality, he, is through MJE is taking a larger position, in JBG, which, is quite a strong indicative sign. I said MJ has capital to build such a large position, as you can see right there, they are number 10 shareholder. And the quarter for them right now would be ending as October. So the next quarter will be ending this January. Give me a second, let me confirm something, by the way, guys. And for those who don't know, Jamaica Broilers financially periods end on the last Saturday of each reporting period. So in the case of January, April, July, and October, it's the last Saturday. So in this case, Jamaica Broilers Q3 ends next week Saturday, which is January 28th. And I like to just point out factors so persons can, be aware and don't be like JBG's later or whatever, you understand? You have to be fair. You have to be fair. But you have our senior directors and executives by JBG quite heavily in recent times as well, which is a strong contextual signal in terms of management being bullish on the business going forward. And the reality is, it's a product that you really cannot avoid in a sense. And as Chika pointed out, the people are tired to an extent of what is being served. And I wouldn't be surprised if JBG's chicken would have qualified to be exported to the EU, because that the EU doesn't allow certain things that the USA does that in the EU. And if you can export to the EU, that means that your product is actually good.
Yeah. I mean, quite a bit of purchasing. We love to see purchases.
Rather than sales.
Yeah, man. This one is probably you, Andre. You bought this 4.3 million shares?
Yeah, that was David.
David, I don't think David committing so much capital to the market right now, man. If he said cheeky, I would have believed you.
Yeah, no.
But I like that though. All good signs. Interesting. I think I'll take a look after this. Interesting. Love that first pick. Chike, you're up.
I'm gonna stick on the same. So again, my thing was as I walked in, depressed markets in terms of which one is depressed, which one the news is talking about. The expectation is the main market takes a beating this year based on how everything is going on. So if I'm sticking to the main market, and you guys always know that I'm always talking about companies that I think are cheap. And if we're going value, pretty much you're gonna have to go still with the companies that are doing in the financial space.
Mhm.
So I'm
You
gonna
want to
pick
share?
one. No, I don't, because I'm on that chart. It's fine. I'm just gonna pick it, and I'm gonna pick JMMB pretty much.
Wow. Wow. Okay.
Yeah, and I'm
Okay.
gonna I'm gonna pick it because everybody knows that they're the common beating horse. Every single time the price runs up, then we beat it back down, and the price goes back down. But the truth of the matter is that it's now that their space is genuinely supposed to shine. They've been doing all of this stuff that they're supposed to do with respect to engagement in terms of getting more customers online using their products. Hey, everybody touts their version of Moneyline, etc., and so forth. Being able to get equity, get purchase your stocks, right? For those who are doing that, or looking at it in that way as a
Moneyline
stock.
is a definitely a community favorite kind of.
All right. So henceforth, with that kind of stuff going into what is supposed to be the current climate? The current climate is high interest rates. Who benefits the most? Banks, financial services. Normally benefits the most. You're getting the company right now, JMMBs, everybody knows I like margin of safety, is like massively high. Like literally it's in single digits, which means that
Because
once it's in
it's been yeah. Go
yeah,
ahead.
so
Go ahead.
in single digits, that means that one out of the two things is down, or both of them are down very low, which is either their PE is down or their book value is down. So we got JMMB at $33, and their
Yeah.
book value per share is currently at about 23. So that's about a $10 difference. If you try
Wait a
buying,
second. The capital has been depressed that much, Shika?
pardon?
Has their capital been that depressed in terms of the equity base? Because I know they're taking beatings because of the fair value losses on the bonds, but they're taking that much of a beating on their capital?
I haven't
Because
checked
it
it.
used to be higher. Let me check right now.
Yeah.
The capital taking a beating. Investment revaluation reserve, a
Mhm.
loss of 22.
Well, look, everybody has put out. Look, what did I say at the start? I said that if the global market is doing big ECLs, what makes Jamaica any different that we are immune to doing the same thing? So henceforth, the bigger companies, who was it? Andre, you can help me out. Was it Goldman, or was it JP Morgan Chase? Somebody was in the news recently that they have extremely high this time around ECL for credit losses that they expect to happen, right? I'm not surprised that all of the other banks are going to up what they expect to happen for their expected possible expected losses. But if I'm going to stick to everything about it right about now, JMMB's been undervalued, but right about now, it's well down. Like their PE is not even just single digits; it's at 6, and
So
their
I
price
just
to the price to book is like just 1.4 times. So in all honesty, again, value play here, people. I'm not saying anything else in terms of how I view them. It's not about cap gains. It's not. I mean, yes, the price could run up as
Well, I
well
mean,
too.
you gave us context at the start about what you're looking for, and that's why we
Yeah,
said the context. So,
yeah,
I mean, they are known to pay consistent dividends. So, I mean, you did mention that that's something that you. I mean, they paid one dividend last year. They paid two in 2021. Let me actually share that.
And
Um,
2020, they only paid one.
yeah.
And
So,
it's just the reality of how they operate as a regulated group. So
mhm.
that's just the reality. So why people are gonna say JMMB I do this, that, and not paying dividends, the reality is you're seeing, where financial entities are, just retaining more capital, and for good reason.
you know
Uh,
what? Yep.
we're in a very difficult market, and Cheeky, I just checked a while ago, and you're right. They took value at 23.78, which
Yep.
shows how much they've taken a beating over the last year plus from those fair value losses. And JMB is likely to hold most of those assets to maturity. So
Yeah.
it's not necessarily a realized loss or anything like that, but it just impacts the present value of the asset, and that's just my context. And also, for those who don't know, I just checked JTrader Pro a while ago, and I saw that Image Plus Consultant is on JTrader Pro now, which is
Oh,
good,
nice.
especially listing ceremony this Friday.
Uh-huh. Well, I'll bring that up. Without sharing my portfolio, I don't want anybody, you know.
Yeah. Getting any ideas?
Let me stop sharing that screen just in case. Yeah, man, continue though, guys. I mean, um, thoughts on JMMB, Andre, David.
So remember, JMMB just acquired Banco Multiplay Bell in Damarep, and they combine it to make a new entity. They renamed JMMB Bank in Damarep, and that's a commercial bank. And we understood that getting a commercial banking license in DR is not as easy as it's made out to be. So for them to have gotten it and to have gotten it at book value is not a
Mm-hmm.
bad thing. And the thing is that JMMB is planning to deploy different products and so forth. And while persons give JMMB flack for not pushing products out earlier or in the technological upgrades, I'd rather a proper product working once going forward than a product rushed out to market and
Agreed.
it keeps flopping every second. So that's one thing. Two, JMMB is still going to be benefiting positively going forward from a financial company. And remember, Tajiko Financial Company is actually acquiring L.E.A.R.N out in Canada, which they're expanding on how it's going to positively impact their earnings and book and everything else, which
Mm-hmm.
for benefit JMMB. And the thing is, despite the fact that JMMB is seeing disruption in fair value and so forth, JMMB is still benefiting from the fact that JMMB is still benefiting from the fact that SFC's dividends come consistent every quarter, and they can use that income to pay down the bond relating to the SFC share, the debt against JMB International. But even so, there is an income every quarter. SFC, is expanding, and we're seeing Surgical Group Jamaica is expanding, which is a subsidiary of SFC. So that's another angle that's as well. And let us hope that the Trinidad authorities give JMB that leverage to actually execute on their desired buyback. And this is why I said Trinidad authorities, because they've explained that, based on the interpretation of laws and regulations in Trinidad versus Jamaica, that is why it's been delayed. And I'm sure that they themselves want to introduce liquidity to the market as best as they can. So let us see if that actually goes through. But JMMB has grown pretty large, one of the largest companies on the JSC, in fact, by asset size. More than $600 billion worth of assets, larger than Scotia Group, and even inside the core group, Jamaica itself. So we should continue to look out going forward, in terms of JMB's growth. And I forgot to mention, JMB is taking SFC increases every quarter, or just every month, because of their buyback. And JMB has spent a single dime, and their stake has gone up by almost 1% in less than 2-3 years. So
Well, on the topic of buyback, I mean JMMB's financial year ends in 2 months, right? We have not seen any notice about the buyback. Is that something that you're thinking that we'll see, David, by the time this financial year ends, or you think they'll push it forward?
So it all comes down to a Trinidadian side, because white persons are going to say, screw Trinidad, we're not care whatever. The reality is JMB is cross-listed and internally subject to the laws that govern that market. And if it wasn't the case where they had to worry about the situation regarding Trinidad, I'm sure JMB would have already executed the buyback as desired. And JMB has no necessary reason to lie either to the public that, I was delaying the buyback, because the Trinidad market has different regulation interpretations to Jamaica. And for context, when GH was doing the deal with when NC was looking to acquire their control interest in Guardian Holdings, we saw shareholders down there protested and so forth, and actually resulted in the price that was being offered being increased, and where GH was actually fined. And we're still seeing Jamaica catching up in terms of investor protections, ensuring that they just introduce laws against Ponzi scheme and pyramid schemes. So hopefully the Trinidad market, moves quickly and works with Jamie to say, hey, we agree with your interpretation and so forth, and we'd like to do your buyback.
Okay.
On that note,
I'm trying to find my username and password for my demo account, not finding it. So I can't show the
use Dashlane.
Okay.
On the note of buybacks, though, there's something I was reading in truth. There's something I was reading very recently about buybacks. So, in terms of how buybacks being done need to be done strategically. You just don't do buybacks for buybacks' sake just because, and that's the part where it's challenging. This market, unfortunately, I don't necessarily like the fact when.
Okay.
You hear me?
Sorry, I think the internet might have went down on my side, but I think we're good.
No, I'm hearing you. So you haven't gone anywhere.
Continue. I think we're good. We just got a brief disruption.
Okay, so if anybody has looked on again on the global markets, you would have noticed that Bed Bath & Beyond is pretty much talking about the fact that they might go into bankruptcy. One of the biggest things that I saw in a write-up by one of the analysts, which I think was fair enough when I looked on it, was that they basically got run into the ground by the fact of doing buybacks when they shouldn't have been doing buybacks. They didn't have the cap. They needed to basically be putting their house in order in terms of their liabilities. Let's keep it simple for the audience. A company that you buy is simply their assets minus their liabilities, and that will leave you with their equity. The equity part is what you, as the shareholder, has to get from the company, right? That's where you're getting your stake in terms of return. And at the end of the day, if your company is doing buybacks, but their financials are not in order, and that's a stupid way of doing a buyback just because some shareholders pressured them into doing so. No, that doesn't make sense. So the truth about it is that JMMB doing a buyback for the stock price to be more lucrative. At some point in time, you can't ignore JMMB. At some point in time, I don't care what anybody says. That's my personal opinion, because a company that solidly performs, but also solidly rewards their shareholders from their performance, it's just greed. Yeah. If it's easy, if JMMB is paying a dividend that is going to be every year consistently better than inflation of the country of Jamaica, maybe even more specific, of Jamaica, and everybody's hunting money. Why? And again, we go back to when we have a high interest rate market, you're supposed to pull your money out of equity and go into safer spaces like bonds, are going to safer spaces like your certificates of deposit, stuff that actually give you a quicker turnaround, but a more secure, what they claim, quote unquote, a more secure return on investment. Cool. But again, if I have a company that is giving me, so our latest point-to-point inflation is 9.4%. If I have a company that is giving me 10 to 12%, and you're beating the stock price down, it's good for me. Because let me put things in context. Last year, 2022, April, it was $47. Where we now? 33. So I've basically gotten a whole that's over $10 in terms of units extra that I can buy in JMMB if I'm a long-term shareholder, and
Yeah.
more so if I'm a person that was looking for the value being derived from JMMB was being derived out of income for them, because they're still paying it. And then you take all of the points that David just mentioned about they are creaming money off of SFC every single time. SFC is US dollars. That's not GMD. It's US dollars. And it's strong. They're performing. They've been performing. And more than likely in the climate currently right now is where they're more than likely going to hunker down even more so to perform even better. At the end of the day, there's nothing that JMMB is doing other than just buying and holding SFC and taking income from them. And you
Yeah.
in turn as a
And, and,
shareholder,
and, and they've shown that they're intent on growing their business, developing product lines, etc. I mean, it's what you'd want a company to do. They're
right?
doing all the things you'd want a company to do.
All I don't need, and fair disclaimer, I'm not a shareholder of JMMB, but I just like them. All I don't need to see them now stepping out of pocket and doing things that basically blows up that balance sheet, take on a ton load of debt, etc. and so forth. Because I challenge anybody to go and look at it. Let's look on what JMMB's debt to their equity looks like, right? Basically, the reason why their PE or their book value is that low is simply because that stuff has genuinely come down. That's how it goes. It goes hand in hand. A low book value number or a low price to book number means that intrinsically that company is bringing down their liability side to make sure that their asset side is higher, and by extension, depending on what they're doing, their equity is also higher and is also better. So are they in a strong position? That is left for everybody to go and look on and see how the book looks.
Yeah.
Just that people want stock prices to go up, but I challenge you again. Last year was 47, and if the place dry up in terms of
It went
oh,
as
where
high
do
as 60, not just 47. Because remember,
yeah,
April
yeah,
1st came, everybody mixed up the
right,
share buyback was supposed to
right.
start
So
at that
that's
point, and it
that's
went up as
60 that's 60 to 33. It's lost nearly half
almost
its
50%.
value.
Yeah.
Right,
Yeah.
half its value. But did anything really change about the company? No, they've actually been just improving, going about their business. That's what you want. It's just the value way. So
Man, I get you. I get you. I get you. All right. So before we move any further, guys, please like the video. Really does help our channel out. If you're finding value, please take a moment, like the video. Share this channel with anyone who you think could benefit from learning about investing. And this video is really about helping you understand how to think about the market, how to analyze companies without getting deep into the numbers. It's more thinking about things at a higher level. Think about the factors that may be impacting the companies, etc. um so yeah, back to what we're saying. I think we can move on from JMMB. I think we can all agree that undervalued company by probably every metric that you can probably think of, and good company in terms of growth prospects, etc. is just one of those things that the market needs to catch up on, its value, or its, well, yeah, I was gonna say its value. Yep. So
Gen-
David, you're a pick, because I don't know what Andre, you had something to add?
Yeah, I just want to be very short. I know that we're talking about JMMB for the longest.
Mhm.
I just want to throw my 2 cents.
Okay.
JMMB, excellent company, undervalued. I love their customer service. There's definitely a lot of room for growth too, especially with the banking side of things. In terms of the financial services, the brokerage, the securities trading, they're as titan in the industry, one of the veterans and so forth. And it's a stock that I always watch, you know. They definitely benefit from that Sagicor acquisition, Sagicor Financial, the raw cash dividend payments and so forth, and they benefit from the buybacks that Sagicor Financial does. However, I just want to kind of point out that for the last time they had a meeting for dividend consideration, similar to NCB, they indicated that they opted not to pay a dividend, and this would have been largely influenced by falling asset prices, and these asset prices that are held, they pretty much account for it, and the capital base, it has been pretty much eroding the capital. So now you know that you have companies within the group that are regulated, they have some ratios to maintain, some capital tests that they have to maintain. So just to share my screen for a second.
Okay. Yeah, man.
I don't know, you guys see my screen?
Yeah, man.
So right here,
Zoom in.
yeah. Oh.
I think Control Plus a couple of times. Yep.
Times.
Yep.
Yeah, you good now. No, that was it. Go back one
more time.
One more. Yeah.
There we go. That's good. Yeah, perfect.
All right. So, but just to look at the balance sheet now. Right here. This is this one right here would be September 2021, September 2022. So pretty much there's a shot, it fell from 64 to 46. And right here we see where investment revaluation reserve has been taking a beating to the tune of 22 billion. So when you throw in the non-controlling interest, it's down from 66 or 67 to 48. So that pretty much kind of guides their dividend paying capabilities. I just wanted to run through. They seem to have encountered a little bit of turbulence, because if we look at net interest income, I mean, it's just one quarter. It's like, you really need more than one quarter to assess the company's performance. But if we look at net interest income, down from 3 billion to 2.8. If you were to do a rough calculation of the net interest margin, it's around 30% compared to 40% the prior year. So I believe what has happened here is that if we scroll to the balance sheet, I believe you have the brokerage, JMMB, that does the securities trade, and then you would have the more new JMMB Bank. So with respect to the liability side, we see where they actually have repos being the main source of funding, as relative to the customer deposits. The deposits that pay you probably 0.5% a year on your investment and so forth. And then now you have the repos, where you have repo rates at 9% for 90 days. And the repo rate is really where the expensive part is. And given that that's their main source of funding, we see a compression in terms of the net interest margin. So going forward, what would be important to monitor is to see how they can monitor this line item here, because as I said, the interest income has gone up, but likewise interest expense increased. So that is why you had an overall decrease in net interest income. Also, you want to remember the gains on securities trading. So pretty much even in the notes, what they said, when interest rates were low, emerging market that and securities would pretty much offer greater yields. So at that time, the focus was there, and you had a lot of money going in there now. But now that because you have good quality assets, and we're talking investment grade assets, giving some very attractive yield these days, you have investors on the global space pretty much opting for those securities, and that pretty much has resulted in JMMB taking a beating with respect to the securities trading side. And then the same for equities. Equity prices have been depressed. So pretty much, personally, me speaking, I'm watching these two line items going forward, as well as the capital base. As I said, interest rates would have showed signs of rate hikes being slowed, given that inflation rate seems to have plateaued. So I'll be watching, me personally, I'll be watching to see how that will affect economic conditions going forward, as well as ultimately the company's assets that they carry through fair value.
Okay. I like that insight, Andre. Thank you for that.
Yeah, appreciate that. I just add my 2 cents. So Chica, in the context of JMMB, the value is going down because of the fair value losses. And we have to remember that these are unrealized losses, which is good. But as Andre rightfully pointed out, the interest expense is going up, and this is meant to also go up even this month. So for those who are JMMB's preference shares, so when them are being re-rated this month, and they're going to be re-rated almost close to double digits, which kind of shows that because there's a rare preference share, and the BOJ's most recent treasury bill was that high, we're seeing right now is impacting them in that perspective. And where's the capital situation of the different FIs, especially their subsidiaries, matters, especially going forward, based on what we're seeing in the entire space. But JMMB, has skillfully navigated to an extent, and they mentioned that they injected 2 billion and 2.5. Well, they injected more capital into JMMB Bank, Jamaica, and Jamaica Money Market Brokers, to ensure that they're sufficiently capitalized. So, in context, kind of tells us that probably we might not get a dividend come May either, but end of the day, the business surviving and the subsidiaries maintaining regulatory compliance is what matters.
Yes, I mean, even kudos to the management team for making a decision like that to forego paying dividends in order to preserve the capital base. So that shows that they have a strong management team in place, and they definitely, it's definitely a stock to buy. It's definitely a good stock. It's definitely an attractive.
You cannot be chucking out money in an environment that is asking you to hold money, and that's the thing that shareholders who are in it for the long haul should understand.
I mean, and we should understand that not every. So we've had this debate before. Long-term investing, short-term investing. I mean, you are an investor either way. Each person decides the way they invest.
Exactly.
That being said, there are certain companies based on just how they run their business, how investors price their shares, are better suited for long-term investing than would be short-term investing. So I just wanted to put that in there. I want us to go on to the next one because the hope is to go at least through 2 picks each. We've gone an hour and a little bit in, so I want to kind of pick up the pace a little bit. I'm going to ask again, guys, to like the video. Usually what I do, if we can get a certain amount of likes, I'll do a bonus pick at the end. So I'm going to be watching the likes. If we're not at a certain point, then we may just, leave it there. David, you're up though.
Main event. That's my pick.
Okay.
Because Jamaicans and the world wants to go outside.
Yeah.
Like, I've spoken to different persons, to different events and so forth, like events that have been going on for at least a decade plus, and they've said that, the most recent events that have been held have been the best on record, and this is compared to pre-COVID times and even early historical times, and all that is showing is that persons really want to go outside, and persons are interested in having a good time as well. And in the case of main event, they are run accordingly and appropriate. What does that mean? So when COVID hit, main event basically laid off most of their team members and the other, I should say, contracted persons. But at the same time, the company kept its head low. They might have had to leave their HQ, which was costing them more money to preserve capital. And the CEO mentioned that he took a pay cut, which is good. So right now the company has only one bank loan, which they can sufficiently cover. And the most recent quarter, Jermaine, right? Yeah. So they earn more during that particular quarter
than the last 2.5 years.
Jermaine, they earn more in that one quarter in profit than they did for any prior financial year. Context. One quarter greater than any other previous financial year, meaning 4 quarters. And profitability. And the thing is, if you look at the cost of sales line, they're keeping that very steady. And this is when you consider inflation and everything else in the environment. So we've got to get a cost of sales line very steady. Speaks about the strength of management ensuring that they can prepare goods appropriately and early to keep those costs down.
Yeah.
And we've seen so many different events in recent times that main event is just literally back to back, like as one event done and just pack up ship and go to the next event. No little rest time, and which is good. And we saw where the company paid a dividend recently, 9 cents, which is the largest in their history since being listed. And that speaks to them feeling comfortable towards shareholders again with capital. And we saw where Sovereign Ventures became the second largest, the third largest shareholder, the 10% stake. And SPL plans to have a production company with main event as well. And it just speaks good, because even if we were to hear tomorrow that the world is ending, I can guarantee every Jamaican is going to go party. Like we were hearing persons, you're hearing that party loans are going down. People gonna borrow money from their friend and family and say, yo, I'm gonna pay you back later. Because people just enjoy themselves. And we're seeing Burna Boy, we're seeing I Love Soca. We saw all these events being packed to the brim, Burris and Bujo, and it just speaks to the fact
So
that
main events were a part of all those events.
so Burna Boy, yes. Some of the
Okay.
other ones, not necessarily. I cannot really speak and say yes because I don't actually have seen who was at the event, but
Yeah.
that's one thing. And the thing is that main event is heavily focusing back on their other divisions. So M Academy, so we know that in the case of main event, they operate what you'd call a specialty space, in this case entertainment, and the persons, in this case, persons who want to work in the field, have limited scope or options to get the training that is relevant for them. So I remember that main event second AGM, where Solomon said, a particular screen behind him at the time, a digital screen, the only few persons who can really operate to set it up. And they're in like M Academy, they're working M style, which is focused on it. So like they've been to Naomi Garrick, Rochelle Cameron, and I can't remember her name right now immediately.
Yeah, I know the event. I can't remember the name right now.
Emerge. So
Emerge, yeah.
M style works on Emerge. M style works on weddings. Like Gordon Silver's wedding was done by M style. And we're seeing, multiple weddings, multiple small private events as well. And you go to some of these AGMs, you're seeing main event running the technical part for like some of these AGMs. And you're just, and the thing is, when COVID hit, and I remember driving in 2021, I saw a good number of the trailers, or not trailers, but the cargo hull parked up, or I should say, kept in a storage area on Marcus Garvey Drive. When I pass by Marcus Garvey Drive anytime now, that lot is empty.
Mm-hmm.
That lot is empty. So when I was passing by 2021, it's like 4, 5, 6 them parked up all along going down the road. No, it was all on the road. And the reality is, Solomon has spoken about grandiose plans, in terms of expanding the business further and needing a lot more capital. So, she's going to come back to the market, but at the same time, the general income generating capacity right now, and even if they come for receivables and so forth, they're in a good place. And the truth of the matter is that the company is in the right stead with respect to having that market position and also working with its customers, because remember when Omicron was giving issues, and then 2020, Omicron, I said 2022, and that deferred revenue, and the clients still went through their events, and we're seeing where all these big corporate companies are having these massive events again, and the reality is main event has done a good job in terms of putting themselves in the right spot to dominate their space. So you got some comments now on my pick.
Yeah, definitely. Think that so it has seen some growth. I'll just say that already, because once we saw, and I think I did the stock review for them maybe around May, June last year, and one of the things I said for the review is that everything opening back up, we're gonna probably see them have the best quarter, the best year than they've had in the last 2 years. I think that's pretty obvious based on how the first 6 months have gone. The price has grown. Let me share my screen again. It has seen some growth since. So this was last January, $4. In the last 12 months, it's been up to $12.50. Right, that would be 200% from where it is now. So I would say it's one to watch, but I'm also watching to see. Well, I definitely think as the quarters go by within the year, because this was the same that we looked at was quarter ending July. And we know that the events that would have happened since July, Christmas holiday, etc. So that quarter is going to be very good for them as well. I'm just watching to see if this will be one of those that will go to new all-time highs. Those are the kind of things I'm looking for, but I'm certain that their financials will continue to improve. It makes me think about Mail Pack. I don't know if you guys remembered what happened with Mail Pack. Catalyst came out in terms of the pandemic that led to above average revenues for them. Mind you, they would have just recently listed at the time, but I'm saying that in the context of main event now being what we're seeing in terms of revenues may now be to a level that we haven't seen before. I just say that as a caution to those who may be interested in the company. Watch the price that you may be looking to acquire, if it is that you're looking at this company, because based on the price it's trading at now, it would be down 25% from its high for last year already. So just bear that in mind. But I do think they're gonna have a great rest of year. You are right, David. Everybody's looking to go. Like I love doing virtual events. Everybody's asking me about in-person events or hybrid events. So I mean that bodes well for them and the industry. I'll just leave it there. But good pick as well.
Any comments from Andre or Chica?
Yes,
Andre, go ahead.
Okay, so we see where the entertainment space definitely open up, and if it was one thing about Jamaicans, if possible, outside, So over the Christmas period, I remember, like you see, party flyers everywhere, or event flyers everywhere, and main event is definitely like with respect to equipment and all of that in terms of setting up stages and the whole venue for the events and so forth. They're pretty reputable in that space. So once we can see evidence of how the sector is performing, it's highly likely that main event will definitely benefit from that, as well as weddings and so forth, because they have a wedding segment as well. So back in the pandemic, when events were pretty much at a standstill, there were none at all, basically. And now
losing money.
Yeah, there was a lot of pent up demand, so pretty much now that it's open, everybody, some people had accumulated, some little bit of savings and so forth, and then they just say, hey, I've been to a party in a while. So main event stands to benefit from that, and it's evidenced in that 100 million that they got for the it was the July quarter. As David mentioned, it's a record quarter. So the Christmas quarter, I believe the quarter would end January thereabout. That quarter should have likely benefited from all the events.
Yeah, man, it would.
Yeah,
so the concern is really for persons to look at price.
Yeah.
To ensure that they're getting a reasonable price.
So twofold issue, Jermaine. Unless you're going to be buying from a main event or a Mayberry or SPL or one of the 10 shareholders, it's going to be very difficult to actually get shares at a lower discounted price. Because in the case of main event, most of you are held in the top 10 and the executives. So that for context, that just simply means that if you want a discount, you have to pay, because SPL got $50. What is it, Jermaine?
Tax split coming.
That's one possibility. I'm probably going to suggest it to the management, but the reality is, if you want to catch the proper discount, you're really going to have to pay for it, and that's it.
So let me
we're really realistic. Like
the volume is pretty low indeed. The volume is low. The highest volume.
Check the top 10 report, Jermaine. Check the top 10 report. Check the top 10 report. Check it right
that's
now.
That's what I'm doing.
So that's where I'm going to jump in. Regardless of the top 10 report, I don't care about it. I really don't. I'm going to jump in because somebody in the comments, I'm going to say it was L.E.A.R.N. I hope I'm pronouncing that right.
Scroll down further.
L.E.A.R.N.
Oh, sorry. Right. Yeah. They were saying that, price seems rich, but justified by the book. The price now, if you think $10 was rich, and you gave the same statement about mail pack German, right? So I'm going to share. I'm just gonna pop my share now.
You're gonna let us see that the dashboard.
I'm gonna let you. There's more than that you're about to see, because I'm gonna justify one, the price, and I'm gonna justify two, the quantitative. I'm gonna go to technical first, that I'm going to ask Andre to help me out on, and then I'm going to go to the quantitative side of itself now to add
Okay.
on, to pile on. So give me a second.
Yeah.
I am going
That's
to be
that's
sharing.
interesting though, David. I haven't looked at the top 10 since I did the review.
So that is something I think all the time, that the top 10 tells a story that you might not get or see or understand from the stock price alone, because
Yeah,
while I
man.
get Alien's concerned about, the whole stock price quote unquote being rich, we have to also remember that, CPJ was considered was very cheap in 2021, and when in 2022, in the first 2 months, it shot up all the way. And the thing is that they had a quarter that would, in that case, their Q2 2021 in terms of profitability surpassed any prior financial year. And the company is run at a much better structure right now compared
Yeah.
to pre-COVID levels. So, I tell people that although it's might be seem quote unquote rich, that's when taken into context. If you're a company where the top 10 and executives only own, for example, let us say 50%, then you can somewhat understand, the time it takes for some prices to increase.
Yeah.
But if the top 10 owns like 93, 95, 97% of the shares, then it's very easy for the price to increase to particular levels. And we're
Yeah.
seem to notice the space right now where there was a strong quarter and the supply of shares was very low and the price was at the ease of just increasing pretty fast. And I
Yeah.
think just something I'll take into consideration with the junior market stocks, that their prices are going to increase somewhat faster in times just because of the low float, not because the certain owns too much at times, but also, some people just want to hold on to their shares. They want
Yeah.
to proper discount on the share that to actually pay for it. So if right now, if I person has cash, I think my broker say, hey, I requested the different traders in the brokerage community that, hey, I'm willing to buy this much for this price, and you might get a bite, because people who might have stocks might also want cash, and some of these stocks were heavily liquid that they could not exit appropriately, so you might get
Yeah.
for the right price, and that is
Right.
why persons are hesitant of the industry to anything right now. Your broker or advisor can always, assist you in arranging a trade once you have the particular volume and value to match it. So if
So
you
I'm
have,
gonna
for
keep.
example, 10,000 US dollars, the broker can find the appropriate price and discount for you, to be honest.
I'm not even going that high. I'm gonna keep it simple. You want 100,000 units? Good. It's $8. That's 800 grand. Even if we're not going to 100,000 units, you simply want 50 units. You're seeing my screen right about now. The first part, the shares outstanding. You only have 300 million shares on the market. Pretty much for a junior market company, that's extremely low. Right. So the first part of, could they come back for doing a stock split, etc. Well, there you have it. 300 million shares is extremely low. They've not really put anything out. Second part about that, net income growth. So we already see that they had the quarter of itself, which is the best quarter ever. That's not a one-off fluke, just simply because everybody echoes it. Andre said it. Jermaine said it. Everybody wants to go technically, not actually, technically for Jamaica, COVID done. Zine, we just started 2023. Do you know what happened this year? Everybody is keeping everything. This is the first year everybody gets to go back out on the road.
Yeah.
And I've been to a couple of places, and the first thing that the MC says is, yo, we outside. So here we are outside doing it big time. What coming up later on? It's in January. We are going close. We have Easter. We're gonna have all of those different parties. Once again, main event is gonna be in the thick of things for the whole of Carnival, for the whole of everything that is gonna be taking place. And we got holidays coming round the clock. So we have Carnival, then we're going to Heroes Weekend, then we're going to XYZ. It's gonna be a packed 2023. So that one off that they just made is not a one off, at least for 2023, because everybody want to be outside. Cool.
Yeah.
Third part, that price at $10, that price was there last year as well too. The price at $8.99 was there last year as well too. So in the context of the price kind of rich, no, not really. If you're looking definitive value, yeah, it's overpriced if you're looking at value. But in the context of the fact that they just started paying a dividend, first one, 9 cents there or so, right? it shows you that the company now is in a position to start doing things that they didn't do before for however long they've been on the market of itself. That bodes well. Secondly, Jamaica is an entertainment country. Make no mistake about that. So henceforth, as long as entertainment is open and Jamaica is open for business, this company is going to be gaining. Third, and then what is it? I'm on my fifth point, I guess, in terms of statistics. There are only
You make
two big
a
companies.
strong case, man.
There are only two big companies. I mean, again, I'm not a shareholder, but I can agree. There are only two big companies in the setup for this kind of space. What is the other one? Ain't listed. It's phase three production. Zine. So if you're not doing phase three, the next person you're coming to is Mig.
Yeah.
Yeah.
So at the end of the day, that's that. So now we're looking on this particular sheet, but that's not the sheet that I want. I'm actually going to address Elaine's situation, and this is where I need Andre's help from, because on the situation of stock price of itself, in terms of paying people basically been asking, oh, do we overpay? So let me make sure I get this sheet to
Yeah.
come up properly. Hope I
Sharing now.
can let it be seen very nicely. So big up Andre, because way back in the years, if you guys have done Andre, if you've looked at one of the first learn
Trading
grow
strategies for the
trading
JSC.
strategies,
Yeah, man.
Andre presented to us a Excel sheet of how he did pricing and moving averages. And I reached out to Andre and said, yo, I'm taking your sheet to the next level. I'm about to automate it in a way, in the way of how automation being that once I fill in the data information, automatically it's gonna update. You're looking at Meeg here. And I'm keeping it very simple. For those who understand the technicals, I'm not going very, very big into anything. I'm looking at three primary moving averages. It's the 20-day, the 50-day, and the 200-day. There are two statements for anybody that doesn't understand if you're trading technicals. When the 50-day crosses over going upward, the 200-day, you are in what is called a golden cross, which means naturally the price is going to jump. And when the 50-day goes below the 200-day, you are in a death cross, which means that the price is naturally going to go down. This blue line here is the 200-day. This orange line of itself is the 50-day. You see how far apart they are? So pretty much they're not coming anywhere close. And if you notice, there is a slight uptick of the 200-day continuously rising. Now, here's what I decided to keep it simple, and I said to you, I don't care about your 10,000 US dollars. You want 50,000 units? Well, this bar here on January 17th is a bar for 250,000 units being sold and bought. Cool. And what was that average price out on that particular day? Well, that was, let's see now, that day, $9.98. And as you can see, as it stands, Andrew can help me out here. So the price has shot up from since January of 2022. It has shot up. It hasn't broken any of its trend. It's still in an uptrend, and all that is happening is that it's just flattened out for now. With the situation of that's the technical part, and when we go back to the quantitative part of it, or the qualitative, sorry, part of itself, which is A, Jamaica open for business, B, we outside, and C, everybody wants to shell out some money for a party. And when it comes to a big party, you're only calling two people. You're more than like calling phase three, which is for stage shows, and you're calling for parties. Actually, most people are calling main event. Another thing too, if you take David's statement of the fact that when he passed by Marcus Garvey, in truth and fact, yo, COVID lockdown and all those containers were parked up. I saw them. I went up a session recently, and yo, is main event there. So at the end of the day, here we go. And again, the float is small, 300,000 units. Who knows what happens? But at the end of the day, I mean, you have to be looking at all of those parameters to see to really look on it, and everybody will recognize, hey, Chike is suddenly talking about a trading strategy because he's in technicals now. Yeah, we learn, we grow, we advance. That's how we invest.
We
So
learn,
hence,
we
we
reinvest, right?
learn, grow, invest. So looking on technicals, and I've done my technical homework, you have the volumes you're asking for. What? you're worried about not being able to move 100,000 units. It's right there. It's been moved. 50,000 is easily moving every couple of months. I mean, and the notice in this is January 2023. They've been moving at the very least for 10,000. This is a big whopper one for 216,000. The next one is 44. Next one is 52. You can get in and out if you wanted to. And notice this orange line is the actual price. Notice that the orange line on average is steadily going up. So henceforth, you have the 50-day over the 200. You're already in a golden cross situation. You have the 20 days about to cross back over the 50 and go up. Normally, the way how it works is when these lines, which are the prices, when the price movement starts to push upward, it is based off of how the general price movement has been going day on day. It just get averaged out. If the average price movement is in an uptrend, you can, unless some bad news come out, God forbid, the price gonna dive. But everything bodes well for them going forward. I mean, is $10 good? That's your decision that you'll have to make. But if you're looking to get it apparently back at $6, which was basically where it would have been coming from, well, your corner is dark because it's not broken that it hasn't seen $7 on average since last year, August of 2022. Good luck
Mm-hmm.
with that. So henceforth, in the case of it's too rich for you, you might have to just bite the bullet and accept that
Yeah.
any
I'll,
band between 8 and 10 is where you need to be just now.
before I even go further, Andre, was he correct in his analysis, sir? In his technical analysis?
Yeah, man, you have it, man. Yeah, no, they definitely right in terms of the short. When you see the short term averages going above the longer term averages, it normally signals an uptrend. So when you see the price being the shortest, cause that's pretty much on a daily basis, and then you have the 20-day average going above the 50 or about to go above the 50-day average, it definitely signals that the price is in an uptrend. Chico, I probably encourage you can probably build an app that can readily provide
No,
the
man, no, we
price.
actually, so we
We
actually,
actually did talk about it. It's in
we're
stages. Let's see where it goes.
Yeah,
yeah,
man.
man, LGI app coming soon, man. Don't worry. Chica and I will share more news on that.
So,
All right, cool. So David had to go, guys. Sorry about that. So what I'll do, I'll share his next pick. Because again, we're gonna try and wrap this up in 20 minutes. So this is gonna be like a lightning round. We're gonna do our pick, then we're gonna share our reason. Then we can give I agree because I disagree because, and then we just keep it moving. All right. So we're not gonna do the same explanation only because, as I said, I want to go through at least two picks per person so that we can give persons good amount of companies to review. So my first pick, because we're just getting to me, is one that I've mentioned before. Again, I think that this is a year that it's going to actually start to bear fruit. Just recently got to its IPO price. I mean, been hovering there for a while, and that's TransJamaica. We know that some projects are coming to completion for them soon. We know that the price has been hovering around IPO price, which is when it would have listed in 2020. So essentially, we've seen no growth from IPO. We saw a movement to $1.90 last year, and that then it found its way back down. I think that they're gonna have a good year. I think that their numbers are gonna be an improvement over previous quarters, and there is and they should be seeing some cost savings, I believe, from their acquisition, at least from that perspective as well. So yeah, that's me. I don't know if there's anybody who has anything to add to that.
Don't have any disagreement about TransJamaica just because actually that will segue into my pick. So I'll get to my pick in a second, but the TransJamaica one is simply this. So it's connected, government connected entity in that kind of way. The way how the capital for them works is they come back to market, they get capital accordingly, etc. But the thing about it is that you have, again, just go back to the prospectus. That prospectus lays out exactly what they're supposed to be doing for you. They are technically supposed to be an income bearing company for
Yeah.
investors, and it's cheap, as in $1.40 is like really low. So to be very honest, based on the fact that they consistently go out and pay, they pay their dividends, their
Their
margin of
dividend yield can be higher
the
still.
dividend yield can be very higher. But in all honesty, think about it. They went down to $1.30, or what, did they get down into the 20s at one point
Yeah,
in
man,
time?
yeah, man, yeah, man, yeah, man, yeah,
I
man.
mean, they're kind of settled at $1.40 right about now. But again, I guess the situation is priced in already, because them buying out, it was in what did the place name, something?
JIO, Jamaica.
Yes, GIO. That's correct.
Mm.
Them buying them out, taking out that, removing that kind of liability there. So it's all them now, just to run the thing, to do it properly. You got the highway that is supposed to be coming alive. There's a small portion of the highway that is
So,
detoured.
so imagine when that comes alive and the revenues start to go up from that,
Well,
etc.
if I don't need to go that far, anybody that works in Kingston but don't live in Kingston know exactly how that is, just draining to get out
Yeah,
of Kingston. And a lot of the people have started to move out to Old Harbor, New Harbor, Maypen, etc. The highway coming into play means more people get to move further away and get back into Kingston in a shorter time. It's just simple. That's just how demographics in terms of
yeah,
urban sprawl and so forth works. You create roadways, access to an area that was inaccessible before. It's simple. People gonna move out there. Things start setting up, right? And it just bodes well for TJH. But in all honesty, you don't have to guess TJH. It was laid out there. They tell you distinctly in the prospectus, we're gonna pay dividends at this year for X number of years.
yeah,
Then at this year, and that's the part I'm really, really looking at, because there's no way that price can stay at $1.40, and I'm getting a 20% dividend yield, 25 actually, to be very honest. You bring out the prospectus, but we don't need half time. I challenge anybody to go look at it. They claim year 5, they're supposed to push that thing up, or year 6, they're supposed to push it up to about 25%.
mhm.
Imagine that 25% dividend yield at $1.40. Yo, I'm packing it in. Everybody, like literally, if you're going to do that, and their capital structure
Yeah,
is one where they is solid enough that they have debt. I was made to understand how this is going to work for a company like this. You just have to accept that they are what they are. Infrastructure, it have debt. You just have to work with it. But if it's manageable debt, as the big company that they are, and you can
yeah.
get units, and they are giving you a solid dividend, it's a solid income company. That's it. You
Yep.
know.
All right. So, Andre, if you have anything to add, we're gonna keep it short because I want to go back to you for your second one.
Yeah, solid dividend company. The institutional players will love it, and anticipate. When interest rates do fall, it's at that point in time the dividend yield will eclipse the prevailing interest rates on the market. The outlook is good. The acquisition of GI will likely to see costs being reduced and ultimately greater net profit, and then you have the prospect of the additional kilometers in terms of the extension to Mandeville that will likely bode well for them as well. So it's definitely a good stock. I mean, looking at the graph right there on the screen, I believe traffic volumes have been tracking above 2019 levels. So pretty much they're on top form.
Yeah, man. Yeah,
Mhm.
man.
Yeah, it's not difficult. It's not difficult to understand them. It's there. We know exactly
The
what to
asset,
look
yeah,
for. You know what? This is one
Very
of those
company to
straightforward
understand.
as yeah,
yeah.
straightforward asset. It's about traffic. You just need to be looking on when they do the reports, how they show how the traffic volume has been going. If you drive the road
What
every day,
what I'd
that's it.
say, and this is how I look at it. One, it's the kind of company where, let's say, I was investing $5,000 or $10,000 per month for the last 2 years, right? You can build up a sizable position because the price has stayed below $2. You get dividends each year that you can use to add back to your position, which improves and gives you the benefit of compounding. And you can now use that to replace savings, because you're not getting, even if it's a 5 or 6% yield, you're not getting that from your savings account.
Nope.
So I look at it as if I have money saved, it can go in this type of company, right? If that yield improves, it's going to be even more attractive. I think revenues will continue to improve as well. And who knows, they might have a few surprises for the market. So we'll see. All right. Next one, Andre.
All right, to be short and quick, Dolphin Cove. So we all know the performance of the tourism sector. You know, arrivals have been
Interesting.
basically the sector has been doing well. When you look at the whole, I look at listed companies operating in this space, a lot of them present a lot of opportunity. A lot of them are definitely attractive. But my reason for choosing Dolphin Cove is that, their earnings has been growing. They are earning a foreign currency, very low debt. This year, I believe that the taxation, I believe they started to pay, I believe it's 100% on like full taxation now. And even though they had to pay it, they're still beating the 9 months performance by a long shot. The 2021, sorry, 9 months performance
Okay.
by a long shot. So when you look at the profit for the period, it's basically 3 billion compared to 2 billion. So I mean that's an increase of 50%. And then I mean, when you want to go ahead and further compare that to the entire year ended December 2021, it's basically, they've already eclipsed that year, and they're only at the 9 months. The December quarter we're in the winter season, so that's normally when you have a lot of people flying in and so forth. And then with Dolphin Cove being a heavily promoted attraction for tourists, when you go to the hotels and all of that, it's somewhere that you're definitely going to go if you want to go to Dunsborough Falls or Mystic Mountain. Dolphin Cove is right there on that stretch heading into Ochi. So I believe the outlook for them is very good at this point in time. Looking at the balance sheet, it's a very strong balance sheet, very little debt. And if you're looking at the cash flow from operating activities, they did 4.2 billion for the 9 months ended September 2022, and that compares to 2 billion for 4 million US, sorry, and that compares to 2 million for September, the 9 months ended September 2021. So to keep it short and spicy, I think Dolphin Cove is definitely attractive at current prices. I believe there was a little hiccup for the December quarter last year. So they had I believe they had a loss of 1 second. Let me just ensure I'm talking facts.
Yes, please speak facts. I don't want anybody to message me.
So for the December quarter, they'd have made, when you convert it to JDollar currency using the exchange rate at that time, it'd have probably been a loss of about 80 million. And that's for the December 2021 quarter. Since then, profits over the last 3 quarters have averaged 150 million Jamaican dollars. So anticipating that they're able to continue that trend, we're likely to see the PE fall even lower from 14. So, it's attractively priced at $14 with anticipation that the PE will fall even further, assuming that they had a strong Christmas quarter, evidenced by stopover tourist arrivals and so forth, and basically overall performance of the tourism industry is likely to be even more attractive going forward.
Okay. I mean, I'm looking at the top 10. Almost 95%.
It's a very small float. So basically the shares are limited in supply.
Yeah, man, that's what 22 million shares outside of the top 10. That's nothing really.
Yeah.
JMMB pension fund and oh, okay, interesting.
Yeah, so
all right, cool.
Definitely one to watch.
Yeah, man. Agreed. I like that. Chiki, anything about Dolphin Cove?
Quickly pile on. Once again, main market company and sorry, not me, junior market company, but funnily enough, one of the junior market companies that is in my margin of safety. It's in the double digits, it's close to my threshold, but Their PE is right now at 15, and their price to book is like 1.3 times. So basically, what last traded price, close price $15, and their book value happens to actually be
That's
$10.95.
50% down from the high for last year.
Right. And there is a quantitative point that also needs to be added. They're not just that attraction alone, which they've also expanded. They're also still in holdership of Puerto Rico Beach, right? So that part up there. So for parties, again, we go back. We outside. Yeah, all right. So when everybody gravitates to that section of the country, of the island, sorry, yeah, Dolphin
That's
Cove is not just making money from the attraction; they're making money from other event areas as well too. So I mean, it might be it's if everything is going how it's supposed to be, if just what the tourism numbers are, they're supposed to be up like that. Could be another bumper year for them. It could be a bumper year for them, but let's see what they
And
do. But I like them. I like them simply because yeah, they're within margin of safety right now, and the financials are good.
so you think we may see going back to $30 this year?
If the market decides to do that. But I mean, what moves the markets, right? What was the move that drove it up that high the last time? It has to be around that same kind of sentiment because
Okay.
it's not going to be something simple that they made really good profit kind of thing. That's not what's going to drive it alone. It has to be something potential
Yeah.
that
Yeah.
did that the last time. That's going to send it up
All
there.
right.
just
Cool.
just to add one last point, Jeremy, and I want to tell you that the dividend yield is actually on par with that of TransJamaica. So the dividend yield is actually 5.75% at current prices.
And there you go.
Okay.
TransJamaica is 5.84. So they normally declare probably a dividend around twice per year of about 40 cents. So
Yes. That has been consistent.
yeah, so I mean that's compared to the rest of the market, it's a relatively attractive dividend yield.
This might have to be a dividend portfolio year for me. Let's see.
But again, that's what I'm saying. Again, if you take it globally, value has walked back in. Value is income, value is dividends. So henceforth, you shift, and everybody's supposed to have a balanced portfolio where you have some stocks that are just your dividend income
Yeah.
stocks,
Yeah.
right? And all you do is the environment drives the price down, you double down on those. You keep doubling down on those ones, and you keep getting that dividend income. Right? It's just money. After a while, you literally not even putting anything more, but just the income improve, the dividend improving. You know that your yield is just way better than anybody else trying to buy it when if the price elevates, and you don't necessarily have to sell it unless the price egregiously elevates. But I mean, it's a solid company that is paying you good dividends.
Yeah.
And this is the period for that. So let everybody be aware that
The period
do
for.
not be surprised when you're
Oh,
looking at
yeah.
value this year.
Yeah.
So
Yeah. All right. Cool. So next one for you, Chike.
well, as I said, on the same vein that Andre, it was picked that we were, or should I say, German, you picked TransJamaica.
Mm-hmm.
I am picking Wigton. And I know nobody doesn't like that one in that way, but I'm picking Wigton simply because look at where the price movement has been. Look at how far depressed it is coming from. We got Wigton down to 49 cents. And
But
then
what's gonna be the catalyst for Wigton though?
um hmm
And
I
the catalyst can be anything, right? But what do you think that catalyst could be? Because what's making you add it to your watch list?
well, fair disclaimer, I hold Wigton. I've been holding Wigton for years. As from IPO, sold some, but for years I've been holding Wigton. But I've always looked on how the world has been shifting towards this push for renewable energy, right? And I've always looked on the fact of Wigton's licenses, not necessarily what they're doing with the wind with the turbines. That has to be maintenance, upkeep. Technology can change, and they need to stay in the game for that one. But the thing, funnily enough, that I'm looking at it this time going forward of why they might become lucrative is who bought into them. And
Cool.
sorry, David went away, but is look on who took a more active stake in Wigton. Who took a more active stake in Wigton recently within the last year?
I'm not sure. No, who is that?
Maybe.
Say it.
Maybe.
There we go.
Okay, so with it, is this
And what does he do?
all the companies that Mayberry have been picking?
He has been making short term. And there's a tweet that he put out recently, and he's right about it. I will actually agree. He put out, listen, where's our value? You're doing X, Y, and Z. You're supposed to be doing X, Y, and Z. Where's our value? Shareholders, talk up, etc. The man is going to agitate the situation. The truth about it is, and I just listen, I literally went on their last quarter that was put out, because that's the most recent thing that they have. They're actually still performing. Cool, revenue still there. Things are not decreasing like that. They did state that they're planning to they're planning to move into other versions of energy in terms of moving away from just the turbines of itself. They're still
Yeah.
planning to bring one of the turbines fully back online and get things running, right? Now, with the situation as it is, Jamaica is a high energy dependent company. We're in 2023. So we got one. No, we don't. It's three. We still have 4 more years. Jamaica's all island license. I keep saying it all the time. In terms of when that reviews has to come up for JPS. But simply put, Wigton is going to do what it's supposed to do in terms of I believe that they're going to be pushed to do what they need to do, right? And as such, at the price, and it actually is kind of reflected because, as I said, we got Wigton down to 49, and Mr. Barry Bro beat it down to the hilt. Like he was upset, he was this, he was that about it. But the truth is, where Wigton sits right now, it's back up to, I believe it's in the 60s, low 60s. It should be at about 62, 64, thereabouts kind of thing.
I believe it even touched like 70 cents recently too.
Right. So if everybody got in at 49, if everybody was getting at 49, so if I come back to, and I'm coming back again
I mean, or
to,
even if you're holding from IPO, you're pretty much.
right. So I'm going to go back. Let me jump my presentation again.
Yeah,
We're doing,
remember, we can't do any.
yeah, we're doing it quick. No, this is quick anyway. I just, people who saw it, you saw it already. Again, the price has been pushing up. So pretty much, I mean, everything is running above, and it has not broken its trend basically. So 53 is where the trend started at the bottom level, right? In October 2022, about average. And it has stayed steadily up there at average of 60 odd cents, basically. And it's being pushed up further. So, and as Andre said, we got all the way up to 70. So, I mean, for me personally, going forward, I'm going to give them their day to see where we're at with them. Could be another run, could be something that in this grand scheme of things is said that makes them do something that is just completely favorable. I, fair disclaimer, as I said, I own them, I still hold them, and I like them. I like the space because the space of renewable energy is the future, flat out. So I'll give them their day in the sun. Holding my units that I hold ain't hurting me, in my opinion, in any kind of way like that. I've got other things that take care of that. So I'm cool with it. If it pops up again and goes back to ridiculous $1 whatever, I'll take my look and see if I should take some profit. But at the end of the day, yeah.
Okay. All right, cool. So that was Wigton. So for me, the next one, interestingly enough, and we're gonna be doing a series of videos this year. I would have done a poll. So for those of you who have not seen the poll, we have a poll on our YouTube channel. Discussing a versus series that we're planning to do, and that's where what we're going to be doing is kind of comparing stocks in the same industry, right? One of them we'll be looking at in terms of possibly the first versus series will be RPL versus Fesco. And of course, the narratives that are there, RPL is up and coming. Fesco is a little bit further ahead down the same path. At how much locations Fesco has now, I think close to like double digit. I don't remember the number, but they're quite established. Not great in terms of market share yet, because we know that the landscape is very, very competitive. So they're growing. RPL just has now 3 locations that they're gonna have within the say by the end of January. You would have recently IPO'd, and typically what we don't do for stocks to watch is cover IPOs. So I'm not looking at RPL. So I'm looking at the industry. But the company I'm looking at for this year is going to be Fesco, based on one. There has been all-time high was $8.50. It's under $5 now. I think we're gonna see more growth from them in terms of not just companies as in locations or footprint. Because I would have mentioned that's a part of their strategy. We know they have new products that are coming to the market. And I think some of the things that they've been setting up for maybe the last year, 18 months, etc., may come to bear this year, maybe second half, closer to the end of the year or next year. But I think they're gonna have a good year, and you may see. I'm interested in the industry. The comparison between how investors trade RPL versus Fesco.
They're 2 different companies, though. At this current time, they're 2 different companies.
I agree with you, sir. I agree with you. And I'm also looking at how Fesco will trade for this year. But for all the reasons that I mentioned, it's definitely I am a shareholder, have been for a very long time in terms of lifespan of the company being listed. So my average price is fairly low. So I'm comfortable where I am, taking profit multiple times. And so it's just kind of wait and see as they develop a little bit more. That being said, I do like RPL as well and the growth stage that they're at. And so I'm giving them time to develop. First, I want to see if they're able to meet their timelines for the release of the new stations, etc. Because we know that things happen. So I want to see kind of how they set themselves in terms of the foundation that they lay in the first 3 months. So that's it for me. I don't know if you guys have any comments on it.
The stations that RPL are going to, because truthfully, I have looked on RPL. The stations that RPL is going to do are those gas stations, or are they going to be?
Yeah, man, gas stations. So they're primarily in cooking gas, but they've kind of started to go into gas stations.
I know they have 1 gas station that they're supposed to do.
Yeah, man. So they're gonna shift from 1 to 3, projected by the end of this month. So that means as they, let's say 3-4 months from now, when those revenues start to reflect on the statements, we're gonna see growth that they would not have had previously in terms of revenues, profitability, etc. Well, that's my anticipation anyway.
All right. Well, I'm going to be sticking the mud. I don't care about what they're talking about. I'm going back to what is core. Core for them is those cylinders and cooking gas.
Yeah.
So my expectation is that you expand your strengths, and at the same time you dabble around in the new stuff. So those stations, I expect, as a matter of fact, from the design of the first gas station, those new stations could actually be some pretty nice cooking gas stations if they were to figure out a way how to multi-purpose them in the way how the designs were shown. So for me personally, it's looking at focusing on core. Fesco core is gasoline of itself. Prices are down really nicely right about now, and as such, even when prices were up, you still pass a Fesco station, it packed. Pass out the Fesco station at Ferry, it always packed. So revenue generation for them, it is what it is. However, and I was sharing quickly at the time. Their price has been flat for a number of months. So that $5 thing, as you can genuinely see there, I've opened up January. The January period, January basically just start. But even before that, since they had their pop as of last year, they've basically, while they have not broken trend, they have come down and have run continuously along five. So something now has to happen to genuinely get there. And I don't think it's just the payment of a dividend or so forth. It has to be something
We're
more.
talking about RPL here or Fesco.
No, Fesco. This is Fesco's
Fesco,
chart, sorry,
Fesco.
by the way. This
Yeah,
is
man,
Fesco's price chart.
dividend won't move the needle because that dividend is not likely to be strong.
Exactly. It's not at any dividend, point blank. So henceforth, something else has to happen. The orange line though shows though that actually as of today, Fesco dropped below the $5 again and went dipped down to I think it's 478 or 498 or something. I mean, not much below $5, but still, it's just showing that the volumes are not there. That's the next thing that is there, that is evident as well too. And you have to wonder if the market really cares, given as well too that the situation is that the GSE is talking up how much different companies supposed to be coming to market. If this is supposed to be an IPO year when things settle and so
Oh,
forth with
okay,
what's
okay. I
going
see what
on,
you're saying. I see what you're saying.
I
I see
can
what you're
only see more pressure for Fesco. I cannot see that people would basically stay there because money need to move. And again, let's not kid ourselves. Money is going to gravitate to where return is estimated to be the greatest. So henceforth,
I got you.
it could run into some further downward because actually the price currently is running below its 200-day moving average and it's flat, right? So the traders at the very least, ain't really moving anything in Fesco anymore. You can clearly see that from
Yeah, man, that's been evident for a while.
right. So henceforth, given the headwinds that are coming this year, for sure, that is being seen, and given the fact that against those headwinds, if the JSE is actually able to put out some IPO companies, companies come to do IPOs, I expect a push
Yeah,
down.
man,
So
we might have some months where we see two listings per month this year.
yeah.
Yeah, man. Well, I mean, yeah, let's see. Um, I'm expecting there to be some sort of run up for RPL at some point. What I'm interested to see there is where it settles and the comparisons between how whether it's overvalued in comparison. Because the thing with Fesco, when Fesco had its run up, there was nothing to compare it to. Now you have that sort of comparative factor now that you can have as RPL gains traction with Fesco and the dynamic that will play in terms of how they trade. So as I said, it's an industry interest, and it's an interest particularly to see how Fesco will go for the year, right? A stock to watch is something that can have your interest for a variety of reasons, right? So I just wanted to bear that too.
Well, if you go to RPL because we're choosing it as a comparison, and quickly again going back to the traders love RPL, because bring it back up. I have the RPL chart up now. Um, so this is the RPL chart from when RPL started. RPL pretty much is running. Their price is running high, but then in comparison to Fesco, their price is at least $2, nearly $2 less, right? It's nearly half less than Fesco is. So pretty much, I mean, the volume is there as well too. You can clearly see as it is right now. So the fun is not done with RPL. It's only just started. We're just in January. It's there. It's got the buzz clearly. That yellow line is the 50-day moving average. That's pushing up solid. That is in a nice uptrend. And by extension, the distance between the 20 days so far away. There's entry and exit that you can clearly see. There's volumes there that you can clearly see that people are getting in and out. You notice that from the run up to the run up and then coming back down. I mean, it in my personal opinion, they're more lucrative than Fesco right now because I mean the hot ticket in terms of the IPO that just came out.
Mhm.
But you have other IPOs come on Friday. Image Plus is gonna list, and then we see what's gonna happen with that too, and then we will see who decides to take their exits for RPL at that time. But then again, the next pop might be when just before RPL's about to publish their performance, then you might see another run up, or if people are gonna be driving by to see if those stations are actually going up, if they do finish the stations in time that they say, yeah, you would have that expectation and then the possible price into the thing. So right now it's much cheaper. So I mean, it's gonna be liked a little bit more because of that, in my opinion.
Okay. All right, cool. I mean, we'll see. We'll see how things go, right? So what we can do here is kind of wrap up final thoughts. I'll just say, I really do think so. If this is an IPO year like we're anticipating it to be, I think persons can expect to see at least to look for catalysts that are not the usual for companies to do really well. And pretty much the same thing that you're just saying, Chike. So just having that understanding, because even though I think the sentiment towards IPOs may be changing, it still, I think, has an impact on the overall market itself that still, at least for the most part, will remain. Meaning when offers are announced or released, we see some profit taking in anticipation for either prices to go down or for persons to have capital to be able to invest. Now the allocations have been an issue, etc. And we've seen where Image Plus has given up to 35% on the excess. So we'll see what the next few IPOs will be. So it's really just to I think there'll be a lot of need to kind of squeeze out more value out of the market based on all the external factors, the most recent issue, etc. Plus, if it's going to be an IPO year, a lot of things will be pointing to keeping prices a little bit more depressed than usual. So I would say invest accordingly. That's just my perspective, that you may need to look very, very carefully for value on the market, at least for the next 12 months.
Right.
Yeah, agreed.
Mm-hmm. All right, guys. So we did have some kind of questions here going. I wanted to kind of touch on them a little bit because I don't want our audience to feel like we've been ignoring them. So there's a comment that I'll throw out to you guys. Let me see. We did speak on JMMB College. Hopefully that was valuable for you. We're speaking about JMMB for a long time. So hopefully that was helpful. Shelly-Ann is saying in Jamaica, investments are held in a JCSD account at the broker. What is the US and Canadian equivalent? Oh, well, I don't know that answer. I don't know if somebody else answered it. Does anybody know what would be the equivalent to a JCSD in the US or Canada? Shelly-Ann, I'll try and find out for you. I'll ask you to put the comment under the video so I'll remember it and I'll get to it. Let me see.
In terms of buying stock?
No. It sounds like she's asking what would be the thing that identifies the stock as yours. So you see, like JCSD has a record.
Oh, okay, I get it. I see it. Yeah, I see it.
Okay, you hear me now?
Yeah.
Okay,
yeah.
Perfect. Yes, I don't know the answer, so we'll have to find out and maybe share it after. All right. Marvin was asking if we know which fast food chains JBG supplies. Is that locally, Marvin, or internationally? We know they
Locally,
provide KFC in Jamaica. Mm-hmm. Yeah. So let's see. So I think Paper Plate was answering Shelly-Ann to say that it's the DTC, Depository Trust Company. So if somebody can confirm that, that would be good. The ticker for Image Plus will be IPCL, right? Image Plus Consultants Limited, IPCL. I still thought that the ticker should have been Apex, but it's not my call. I do like Cygnus as well, L.E.A.R.N, for this year. Well, I like them moving forward. I wouldn't even know if I'd said this
We
year.
had spoken
per
about
se.
Cygnus though. Well, I would still caution. You need to, as much as Cygnus has been, they have been running undervalued for a while. You genuinely want to look at a company like that in terms of that loan book. Pay a keen attention to how that loan book has grown and how they're servicing it. The financial company, giving out stuff. Look on if they're expected their allocation for losses has grown, and make a move based off of that. Know what the company does, right? So you need to be keen for signals. Just be aware of that loan book.
Okay. Anything to add, Andre?
So in relation, do you think? I believe they have the cash on hand, and I think that what was structured was that, they have the cash on the balance sheet, and then they have a restricted account. So I think memory serves me correctly, what they would do, there'd be some adjustments in terms of existing covenants and restrictive accounts that would facilitate for them to pay for GIO.
Okay.
So to answer the question, no, I don't think AP would be needed.
Okay. Yeah. I mean, I don't think they need it either. Kurt is asking what we think about TGH 8.0.
That's a preference share. I
Yeah,
mean,
man.
you have to understand, Kurt, what the preference share gives you. You don't have voting rights, but you are locked in that you are gonna get paid before the regular shareholder gets paid. You're gonna be getting paid that income at 8%, basically. That's
Yeah.
basically
Yeah.
what 8.2 is. It's actually the yield of the preference share. It's 8%. You're gonna get paid 8%.
And
You're
it
more than
depends
likely
on the price that you get it at, because the listing price,
right.
that
Was
price will give
one.
you 8%.
That's
If it's
that's
running
correct.
higher, the yield is lower.
Correct. Thank you, Andrew, for that. So if the price is higher than what it listed at, it's no longer 8%. If the price is higher, you're getting it at less than 8. It's less than 8% is the yield. If it's lower though, you're getting it higher than 8%. But at the
Yeah.
end of the day, you need to know exactly what it is. But know this, that it's in the order of how things are supposed to be paid out. It's bonds, preference shares, then you get to stock, right? So bonds are normally paid first, then you have pref shares, and then you have common shareholders, basically. If it's lucrative for you, if you want steady, if what is supposed to be steady, and I don't like to use the word guarantee because nothing is guaranteed, but
Yeah, man.
it
Definitely.
is more secure. It is going to be more secure than your common shareholder stock, then it works for you if that's what you like. However, just know so that more than likely, what normally doesn't happen for a pref share is capital appreciation in terms of price. So henceforth, that's the end of that. And you don't have any voting rights per se. So you don't get a chance to make any decisions at AGMs, that kind of stuff. So you have no direction. And they can also call that pref, and they can call that pref share early. That's the next thing as well too. Unlike common shares, they can't call anything until you sell. So
Yeah.
you are locked in with common shares to get either capital gains, whatever is the current div yield, which, well, we said that the current div yield is running upward of 5%, right? Plus 5%. So at the standing, it's 3% off of the 8% pref share, but it gives you a little bit more flexibility because you are going to also take advantage of capital gains if the price was to run up. You're not going to get that for the pref share so easily.
So it's about knowing what comes with it.
And
So
what
yeah,
works for
for all
your
the reasons
portfolio.
that Chike said, I should definitely do a video on preference shares. So I'll work on that. Brandon, we didn't touch on it because what we did in this video is share the companies we are interested in watching. Now, the list that we shared was not exhaustive, but we didn't touch on it today. We should be reviewing them this year, so stay tuned for that one. And Orville said it as well. Speak to a licensed financial advisor. But we have done other videos, Brandon, on showing how we evaluate companies. So the Stocks to Watch series is good to listen to how we go through that process. Or stock reviews, we follow a set methodology as to how we review the company. So those videos can help you to see whether or not it's a fit for you. Views on Panjam, JP, Ricardo, I'll be talking about them a little bit more. I think maybe my next stock review will include one of those most likely. All right, and last comment here that we're gonna touch on before we close. Fosrich has shared their plans. I think a rights issue is pending, and so there's more to come from them. I forgot to mention that David mentioned before he left that Seprod was his next pick. So I just wanted to put that in there. Seprod is a company that he's watching. So just I'll put the listing below the video as to our picks and the timestamps, etc. So you can check those out. So you don't have to watch the whole video to get back to a particular segment. I want to thank Andre, Chike, and David for being here. I think it was a good discussion as usual. We will see how the year goes. O'Neill, I'm so sorry we didn't mention CPJ. I think we will be reviewing them as well. Hopefully that helps. So I want to thank you guys for being here. Thank you for watching. Please like the video. We didn't get to the target for me to share my bonus pick, so I'm not going to share the bonus pick because we're not at 150 likes. So at any point we get to that on the video, then I may just share my pick in the Telegram group. So I'll wait to see how that goes. All right. Monchery, thank you for that point. I don't think we were very technical. Maybe when Chike was looking at the charts, and so that technical analysis aspect that he mentioned. There's a video called Trading Strategies for the Jamaica Stock Market, one of our earliest videos, one of our most viewed videos. You can check out. That will explain some of the terms that we used during that segment. For everything else, I think we were general enough where everybody should follow, but thank you for that reminder. We do tailor our content for beginners, so usually we try to use simple language. So thank you for that. All right, Kurt, let me share the Telegram again. Link is in the chat. All right, guys, thank you so much. I hope to see you for our next video. We have a CEO series interview tomorrow with David Henriquez from Ultra Financiers. So looking forward to that one and some other things that are coming up soon. You'll see those updates on our social media. So thank you guys for watching. We'll see you in the very next video.
Learning is the key to successful investing. And who doesn't want to invest in some way?
Here at L.E.A.R.N Grow Invest, we focus on financial education, all with the aim of sharing our knowledge on personal finance, investing, and building wealth. We do this on the foundation of our faith in God.
If a more holistic approach is what you need, check out our Grow Faith-based financial coaching program.
Find out more about us at learngrowinvestclub.com
and follow us on all social media platforms at L.E.A.R.N Grow Invest.